This is accumulation. There's one thing that sometimes is better than accumulation, and that is called distribution. Imagine you have $1 million saved up in your account. You show up at the office, you say, I want all of my million, I'm moving to the equator to live in a leaf. How much of this million do you get versus does Uncle Sam let you have? I hear things like 50-50, 80-20, 70-10, one guy said. Here's what I know. If you don't have distribution set up right, you're lucky to get 60 cents on the dollar. There is a program, there is an instrument called a tax-free indexed account. And the way that it works is that every dollar that gets deposited in grows non-taxable. 1 doubles to 2 doubles to 4 doubles to 8. And every dollar that comes out 100% tax-free for any purpose at any age. People ask me, can I do that for college savings? Yes. Let's compare it to a 529, which also grows non-taxable. It also comes out tax-free. However, it only is for an accredited college. My son wants to be a YouTuber. I can't use the 529. There's not a YouTube school yet. Tax-free indexed account, I can. I call this $1 million baby because I can use this money for their first bike or their first car, the year abroad while they figure out who they want to be. If they go to college, I can use it for that. If they don't, I can use it for their first business. I can use it for their first house or let it ride. It becomes retirement savings. One other difference. If you have $100,000 saved up in a 529 and you go to do financial aid or FAFSA at the university, they're going to look at this $100,000 and they're going to say, disqualified, you have too much money. When the IRS, when the government, when the wealthy of our country built the tax-free indexed account, here's what they said. Because you're protecting yourself, because you're growing money for your future, we're going to make this a non-visible asset, which means you can go to financial aid FAFSA, do the forms, don't have to disclose the $100,000, get financial aid, use the $100,000 to pay for school, to pay for college. If you're a business owner, you've paid your tax to Uncle Sam. Put that extra money back in the tax-free indexed account, grow it non-taxable, access it back tax-free at any time. Protected from creditors as well. If you're 70 or approaching 70 and you have to do those things called RMDs, if you don't need the money yet and the government's making you take it, you could rescue your RMD by, when your money comes out, putting it in the tax-free index account, growing it, and accessing it back tax-free later. This is the most powerful financial instrument on the planet today. It's the second principle I teach my clients about on how to protect their money, not just from taxes, but how to put that part of their money into a non-visible asset so that later they're protected from taxes. Because I don't know what tax rates are going to be in the future. But if you've already paid the tax today, you don't have to pay it later. That's a big savings. That's principle 2.
Hey, thanks for watching the video. Don't forget to hit like, subscribe, and the notification bell to get more great content.